Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for November 12th, 2017. Hope you guys are having a great weekend, and I hope you're excited for the open coming up. But before we talk about the markets, we talk about what happened last weekend, what happened this week, or what's going to happen this week, excuse me. I want to make sure that you guys all have taken the opportunity to try out ForexAnalytix. All you have to do is try it for $1. You get it for 10 days. No other strings attached. After that, you can go month to month. You can get a semi-annual, annual subscriptions, which obviously there's discounts, but also you can download the mobile app. And guys, we just uploaded the new app in the App Store and the Google Play Store. So if you are a current user, make sure you get rid of your old app, delete it, grab your new app, and this way we have enhanced a couple of features on the mobile application. So make sure you do that when you get an opportunity. All right, let's talk about, well, first of all, let's talk a little bit about last week. It was a really actually quite narrow trading range with the dollar, and I'm going to pull up the dollar index really quick. Let me find it. I know I have it around here somewhere. Okay, so if you look at the dollar index, it was a really very tight trading range. You can see we didn't really go too far. The only problem is that we closed near the lows and near an uptrend line, and most importantly, the neckline of the inverted head and shoulder pattern we're approaching. Now this is important because everybody that's been talking about FX right now, they're talking about the big head and shoulder pattern in the euro, the big inverted head and shoulder pattern in the dollar. The issue that I see right now is that the dollar is really struggling on this breakout. Head and shoulder patterns are, if I had to look at every chart pattern out there, head and shoulder patterns are probably one of the more unreliable patterns. Then when everybody knows about it and everybody's looking at it, then it becomes even a bigger problem. And right now everybody's looking at it. It doesn't matter what financial news network you listen to or you watch, everybody's talking about it. So the problem is that a lot of people are long the dollar as a result. Now if you look at the daily RSI, this is a pretty good indication that the dollar might come down, and one of my strategies that I've always employed is looking at RSI. If RSI breaks a trend line like this, then that means that price is usually going to break down as well. Doesn't happen every time, obviously, but it's one of those things that I'm obviously paying attention to because I know everybody's long the dollar, or at least maybe the retail space or the shorter term speculative traders are long the dollar, and that might be a problem. That doesn't mean that the dollar is not going to eventually get to 97, but right now, near term, maybe over the next week or two, we might come down a little bit. There's a lot of implications to that. You know, if the dollar comes down, how's that affect equities? How's it affect bonds? The bond market, I think, is pretty important to look at as well. I mean, you look at the bond market. The bond market, by the way, is not confirming that the dollar is going to reverse. Matter of fact, bonds are dropping. That means yields are going up. And if yields are going up and the dollar is going down, that's quirky. That correlation is broken at the moment. But if we recorrelate, that means that the bond market could bounce, or perhaps the dollar does continue its rally. Either or, the bond market is at pretty important support. This is a 618 retracement of a longer term range. But we did get rejected by the 200-day moving average this week in the 10-year, and this is the 10-year bond market, by the way, if I didn't mention that a second ago. All right, so the dollar, going back to the dollar index, the dollar looks a little vulnerable. Well, actually, you know what? Let's take a look at the euro. The euro itself, we have this big head and shoulder pattern. But the euro's testing the neckline actually as we speak, or at least as we closed, and I think the risk is that maybe we do squeeze out some very weak shorts. Maybe we do see 118. Maybe it is, maybe we get back to 119. I think it's entirely possible. And especially if, the dollar is correlated to, bonds, gold, the stock market, and those instruments start moving in the direction that would push the dollar lower and perhaps the euro higher. But that's really what I'm focused mostly on right now is, what the dollar is going to do here. Also, I guess I should take you to, let's take you to the US dollar Japanese yen, just so you can see that the US dollar Japanese yen is attempting to break lower as well. And so with that being said, I have to take you over to the Nikkei. Now, I'm going to do this really quick on this chart just because we don't follow the Nikkei at ForexAnalytix. It's not an instrument that we cover all the time, although we will post a chart in like the dollar yen analysis with the Nikkei because we are so strongly correlated. Now, if you match up, and this is the Nikkei, and this is a weekly chart. So I'm gonna actually, I'll take you even to a monthly chart and zoom out a little bit. You'll see in a monthly chart, we are at a 50% retracement. Right, that's from the highs back in 1980 or 1990, 1989, and to the lows back here in 2008. We're at the 50% retracement. Yeah, that was big because you could see the rejection that we had on a weekly candle. That's by the way, that's a very bearish shooting star. And if next week we come down and we break through this support, let's call it 22,000, maybe 22,200, somewhere around here, that could be a pretty bearish event for the Nikkei. Then you could start talking a bigger correction, something that looks like that. Now, and that by the way would be like a 6% correction, which everybody looks around, they're like, wow, we can barely even correct in our markets 1% before bouncing like we did this week. Yeah, trying to think of a 5 or 6% decline. It seems crazy, but at the same time, what you might notice in the Nikkei is just over the last couple months here, we have traveled 22%. Just since the middle of September. So, giving back a few percentage points, like 5, 6, 7%, maybe that doesn't seem that crazy after such a move in the last couple months. Anyway, the reason why I want to bring up this chart is if you go back over to the weekly chart and let's just compare this to the dollar yen. Let me put the dollar yen up here. Okay, what you'll notice with the dollar yen, and I guess we could probably do this. Okay, let's move this just a little bit and let's zoom in. Okay, so what you'll notice is really over the last I'm going to say the last few months, really, this would be since end of summer, we've seen this really big break of correlation. What is the root cause of that? I don't know what it is. There's a lot of speculation that that the Nikkei is being bought by with all these ETFs by the Japanese Post, whether it's central bank activity, whatever, but are they using yen to fuel it? But I don't know, but the yen has stayed strong, where usually the yen would stay weak, where you'd sell yen to buy, to push into, the Nikkei. And we just haven't seen that as of late. The problem is when you have a correlation that breaks down like this, if you get a reversal in the asset that has been moving, then that means that correlation takes hold again, but that means it drops further. So in this case, what I'm trying to say is, if we do pull back in the Nikkei, even if it's just a correction back to the breakout point, that means that the yen could maybe slump back to its range that we've been in for the last several months and maybe even break lower, which if you look at the dollar yen, this level right here, even though you can't read it on the chart since it's a secondary chart, it's about 108. And down here is around 102 or so. I guess I'd have to go back and look, but we could, see the bottom end of this range, which is 108, if the Nikkei pulls back. Now, that's been my longer term analysis with the dollar yen anyway. And the reason why that has been that case is because I've been looking at this as a triangle and we're in the apex of a triangle. Doesn't mean we won't break out higher. I just think that, the apex is still building, and like I said, with the divergence between the Nikkei and the yen, the risk is that we start turning lower, and you can see the dollar yen is making its way lower right now. And I would think at least we could hit the 200-day moving average, which is near 112, if not back towards the middle, if not lower end of its range, depending on how deep a pullback is, not only in the Nikkei, but maybe even in the S&P. So if you look at the S&P, and I'm going to take you back over to ForexAnalytix, if you take a look at the S&P, you'll notice that the S&P is in a wedge, an ascending wedge, and you know, look at this weekly RSI. I mean, it's ridiculous, way above 70, way above the overbought level, and we're actually rolling over before price. Again, it's this warning that RSI is showing you that, hey, maybe things aren't so great in la la land right now. Perhaps that the S&P might correct. Well, if the S&P corrects again, that's just further fuel that the yen might take that safe haven stance once again. Now, I did talk a lot about the charts and kind of what I'm looking at with the dollar and with the yen. One of the other things that I want to point out this next week is this next week we have, and I'm going to pull up the pound really quick just because I want to talk about it. We have several central bankers speaking on Tuesday. Now, this is early in the morning, well, midday in Europe, early in the morning if you live in North American trade. I know I myself am going to have to get up around 2 o'clock in the morning to be able to watch this, but there is a panel discussion in Frankfurt, Germany, by Mario Draghi speaking, Mark Carney is going to speak, BOJ's Kuroda, Janet Yellen. If you think about it, you've got, and those are just the few that I've named that are on the panel. I don't know if there's going to be more central bankers, but those I'm really most focused on. You got the ECB that's going to be talking about monetary policy, and they're trying to maybe exit, taper, and kind of, you know, kind of move away from the ultra loose policy that they've been in, which, you know, obviously is a challenge for these central bankers. You got Mark Carney, that's not only is he doing that, trying to raise rates, but he's also faced with Brexit issues, you know, over the next couple of years. Then you got the Bank of Japan Kuroda, who, you know, there's discussions that he may be replaced. Well, you know, he's going to be speaking. Then you got Janet Yellen, who's going to be replaced by Mr. Powell. So is it Dr. Powell? They're all doctors, aren't they? Yeah. Do they run around all day calling each other doctor? Hello, doctor, doctor, doctor. Yes, doctor. Sure, doctor. Anyway, but you have Janet Yellen that's on her way out. So it's going to be really interesting, and that's why and this is Tuesday, midday in Europe, early morning in North American trade. If you guys weren't thinking about getting up for this, I would recommend that you might want to be around for it. It's going to be a market mover, I would think. It could also be a dud, and then I'm going to be irritated all day from getting up at 2 o'clock in the morning. But hey, that's the price you pay as a currency market trader, right? Right. Okay. The other things that are happening this week that are really important is you've got some employment data coming out of the UK on Wednesday. You also have on Wednesday US CPI. We have retail sales. You have employment out of Australia. Wednesday night or Thursday morning in Australia. Thursday also you have retail sales out of the UK. And then you're going to have Canadian CPI at the end of the week. And you're going to have some other data that might be market moving. But again, Tuesday, early morning, you guys are going to want to be around. I think that's going to be, you know, something that could set the pace for the remainder of the week. Oh, the reason why I want to talk about the cable. The cable, if you guys haven't noticed, we're in a big triangle, a big, huge triangle. And the Bank of England, I thought the Bank of England for sure, in my head, they had sank the pound last week. I thought that was it. It's done. And you know what? We bounced off of trendline support or triangle support. You can see this very symmetrical triangle here. This is the minor triangle bottom, but we bounced right off it. and we're still range bound. But I'm very closely watching around this 130, 135, 130 or 1.3035 level right through here. I'm watching it very carefully because if that breaks, that in my opinion is going to put the pound in very bearish territory, maybe against other pairs as well. But then again, I look at like the euro pound, and this is just to give you another example of how mixed the pound is right now. Here's the euro pound, and you'll notice that the euro pound is actually in a bearish wedge. That means it actually favors pound strength. When you have consistent lows and lower highs, the tendency is for a break lower. And this in this case would be below the 200-day. Now that means the pound would strengthen. So I'm seeing mixed signals in the cable, but that's to be expected when you're in a very tight apex and you're about ready to break out. You get a lot of mixed signals on other different cross rates, but when it breaks out, the pound, whether it breaks out to the downside or it breaks out to the upside, it should be pretty good for every pound cross out there. And that's something that might not be in effect this next week. We might have to wait 2 weeks or so for that to happen, but that's okay. We'll be on top of it here at ForexAnalytix. Guys and gals, if you love this video and you want us to continue to produce them, make sure you click the like button at the bottom of this YouTube video. And just that tells us that you really like it. And if you really like it, we'll continue to make more. And if you haven't subscribed to our videos, make sure you subscribe to this channel, because then you won't miss a week ahead video, or you won't miss our daily interviews or our weekly free webinar. We post all those on our YouTube channel. So you can always capture those even if you happen to work or not be around your computer when we did them live. And remember, those are always free. Guys and gals, thank you so much. I hope you have a great trading week this next week, and I will see you on the FACE webinar this next week. Thank you.